Future moving higher, so is oil. Let's tee up the trading week ahead and bring in our panel. Stephanie Link is the chief investment strategist at Hightower, also a CNBC contributor. John Mowrey is the chief investment officer and senior portfolio manager at NFJ Investment Group. And Marc Short, board chair at Advancing American Freedom, also the former chief of staff to Vice President Mike Pence, and the director of legislative affairs in the first Trump administration. Great to have you all this morning. Steph, let me kick it off with you this morning. When we're looking at markets, we got some data last week expecting the Fed meeting and other central banks this week. What do you think influences where we head in equities this week?
Oh, I think that the market's going to be in a trading range until we get any kind of visibility with regards to the Strait of Hormuz. But if we wait for certainty on that, I think stocks will be a lot higher. So I think you want to take advantage of some of the dislocations in certain stocks that have strong fundamentals but are getting kind of thrown out with the whole market as a whole. If you actually sold during Liberation Day, you actually missed a 34% rally since then. And so I think you just want to make your shopping lists and buy and add on some weakness. So that's what I've been doing. I've been adding to Netflix and Target, Synopsys, and Broadcom, actually, ahead of what I think is going to be a very positive Nvidia meeting this week. Okay, so you've just brought up lots of things for us to get to. John, set the scene for me this week. How are you positioning ahead of all of these other fluctuating metrics?
Yeah, so I could not agree with Stephanie more. You earn that, return to the market over time by stepping in during times of volatility. So I think there's a lot of opportunity. I think particularly down the cap scale, names that are more affected by, a little bit concerns around where interest rates could go. I think that is going to be an area that investors could really, see some potential gains from. I'll make one delineation. Right now we have, obviously a big spike in oil prices, but even though the inputs are the same for the Fed, the ramifications are very different between shock inflation and hot inflation. Right now we have shock inflation. I think that policymakers are going to be more apt to see through that, and I think that should give investors some bullishness as they think about positioning heading into what could be, I think, a pretty good relief rally once we see on the other side of this. Okay, so we saw WTI cross $100 a barrel. It has come back down just a little bit. Marc, personally, gas prices, I've saw in just a week before the Iran strikes began, I was paying $2.80, and then after the Iran strikes, that jumped the same gas station to $3.40 a gallon. That is an issue that affects a lot of Americans and the way they think about their elected representatives.
Well, sure. I think, and the reality is that most continue to say that the supply disruptions are going to last for a while, and so likely continue to see elevated costs. And as you head into the midterms in November, the number one issue for a lot of Americans is affordability. I think if the president's successful, in this campaign with Israel, that there could be significant long-term benefits for the safety of Westerners, but also the reality is that you could help reduce the long-term premium risk in a lot of energy prices. But in the short term, Contessa, it seems like you're going to continue to have elevated prices. And as voters are already worried about affordability, that could create a big challenge for Republicans in the midterms. And I think we talk a lot about the oil costs. We're not talking as much about fertilizer costs, where UAE is one of the largest exporters of fertilizer, and those costs are skyrocketing. And the trade agenda is already having a harmful impact on farmers. So I think the Midwest could really be an area to look at in the midterm elections. And part of it, too, is that when we talk about inflation, which has moderated some, but it means that those prices that went up in 2022 have just stayed there. And, the Americans across the board have started to make some decisions about where their discretionary dollars goes. This week, we're expecting a Fed rate decision. Kalshi has it at 99% that the Fed is just going to keep rates where they are. Steph, I assume that you probably think that as well. What's going to be important in Fed Chair Powell's language this week that the markets will be paying close attention to?
Well, I think they're going to continue to emphasize they have the dual mandate, but that there is a lot of uncertainty from the macro point of view. So they're not going to do anything. I don't even think it's going to be a dovish conversation. I think they're just going to be like right down the fairway and say, hey, look, we know that the labor market is cooling. It's not collapsing. We also know that before the war, inflation was coming down, but it wasn't to their target. And so I think, I think in the fall we probably get something in terms of a cut, and we'll have to see about Warsh and whether he gets confirmed or not. I think he will, and I think he will be more dovish. But right now, they really can't do anything. Their hands are kind of tied. But more importantly is really going to be what's going on with the Strait of Hormuz. If we make any progress there in terms of opening it up, the market is going to rally pretty substantially, in my opinion. And that's one of the reasons why I want to be, kind of leaning into buying stocks on really ugly days.
We know that their airline CEOs have sent a joint letter to Congress begging them to end this partial government shutdown that has TSA showing up but not getting paid. And they want assurances that in the future, these battles over budget or policy don't include not paying crucial airport workers. Marc, how important is it that Congress gets behind that? I mean, this has been big. We already saw a lot of travel disruption because of what's happening with Iran and the Persian Gulf, with Dubai airport shut down and the like. But if TSA lines, and they've been bad, if they start to shut down, there's going to be real issues, especially at spring break time.
Contessa, I think we've already reached that spring break time, and you're seeing those lines. I think the reality that's shocking to me is that when we're at a conflict with the world's greatest sponsor of terror, Democrats remain lockstep in basically opposing funding of Department of Homeland Security. It seems the inconvenience of TSA may be what actually unlocks this and actually ends up getting DHS funded, that continued pressure of the inconvenience. But at the same time, you're seeing various incidents like you saw at Old Dominion University of Virginia Beach, you saw attacks in Michigan. It's shocking that amidst all of that there's continued to have this political position that they hold to say we're not going to fund Department of Homeland Security at this time.
The most valuable company in the world, Nvidia, holds its GTC conference today. John, a lot of headlines now about CPUs and the importance of these central processing units. What are you looking for out of the GTC conference?
Well, I think that those results obviously are going to impact the market in a pretty substantial way. Nvidia is obviously the largest company in the S&P 500 at close to 7%. So we're going to look for continued positive, comments around AI, data spending, and, the CapEx from the hyperscalers. But I expect that to be good. I mean, the reality is you're getting a lot of multiple compression, but you're still got, the semis. Steph mentioned Broadcom, Nvidia. These companies are growing at, over 30% per year for their CAGRs. So, and you're getting multiples down, in some cases in the low 20s. So I think you're getting a lot of multiple compression. I expect the comments out of the conference to be positive, and I think the technology is looking more interesting. I mean, the reality is, even though energy's rallied a lot, it started really cheap at the start of the year. So the market's looking like it could shape up to really start reaccelerating once we see some, a little bit of a pullback in terms of some of the concerns around oil production.